I'm Stuart Jackson, Portfolio Manager at Montgomery Investment Management. Welcome to this week's Video Insight. Aristocrat Leisure recently reported its results for the year to the end of September. We view Aristocrat as having a strong franchise in its core land-based gaming business that will see ongoing market share gains in the North American market in the medium term, optionality in its exposure to the growing mobile games and social casino markets, and very high return generation due to low capital intensity. This provides investors with a high quality business at an attractive price with good medium-term prospects. The company showed pleasing progress in its North American land-based gaming business, with the installed base of machines from which it captures either a share of the gaming revenue generated or a lease payment increasing more than expected in the second half of the financial year. The company maintains a strong pipeline of new products to be released over the next couple of years, providing confidence that it can maintain its industry-leading performance. The premium performance of its products generate relative to the major competitors is still not reflected in its share of the North American casino floors due to inertia created by relatively slow rotation of floor stock. This means Aristocrat's floor share is likely to converge with its product performance over a period of time. When combined with opportunities to enter adjacent categories, the company's earnings in its core land-based gaming business are likely to remain strong for some time. The company's digital operations generated disappointing results and outlook relative to consensus expectations. In the lead up to the result, we identified heightened risk around near-term earnings expectations for the company's digital businesses. Having brought together two acquisitions in the social casino and social gaming space with its existing Product Madness social casino business during the financial year, the company was flagging a period of increased investment in product development and user acquisition as it launched new titles to replace maturing existing games. This had not been factored into the sell-side analyst forecasts for the 2018 and 2019 financial years. Given this heightened level of short-term risk, we reduced our holdings in heading into the result. A feature of Aristocrat is its relatively low capital intensity. This is due to the majority of its investment to drive future earnings growth being expensed rather than capitalised. The company has been very disciplined in lifting its reinvestment in design and development expenditure as its business has grown, due to this investment being the lifeblood of the business. Similarly, the digital business is driven by investment in the development of new games. However, it also requires investment in user acquisition. This is essentially the cost of attracting new players to a game. Aristocrat has stepped up its investment in both of these areas. While this will reduce the digital division's margins in the near term, it is expected to provide the engine growth in the medium term to longer term in a rapidly growing and evolving mobile gaming market. The result announcement realised the near-term downside risk event represented by optimistic sell-side forecasts for the digital business. As such, the stock now represents an improved risk and return mix from which to gain exposure to the company's longer-term opportunities. That's all for this week. We'll be back next week. In the meantime, you can follow us on Facebook and Twitter.